We have a lot of people coming to us who are looking to start up a practice and often ask the question, is it best to go through a limited company or to go through a sole trader? And there's lots of advantages and disadvantages with both, but a couple of things that spring to mind immediately. In the early years of a practice, there's a great deal of expenditure. So the likelihood is, on a brand new practice, there may be some losses incurred in those early years or the first year. In which case, if you do run your business as a sole trader, you're enabled to get tax relief on those losses. What does that mean? That means that if you were to make a loss of £50,000 in that business, but the previous year you made £50,000 or you had a job where you were earning £50,000, then you can get some tax back. So that's quite a big advantage as far as the early years of a practice is concerned. If you're going to take on an established practice and that practice is making large profits, then it may be an advantage to set up a limited company. The idea of a limited company is that it gives you limited liability, as the name suggests, which means that it's very hard for anyone to attack you as the owner of that business because there is limited liability. They can only attack the assets of the business. The other advantage of a limited company is that the corporation tax rate in a limited company is only 20%. The highest rate of tax for an individual is 45%, or more ordinarily 40% for earnings between £40,000 and £100,000. So if you wanted to invest in the business, keep money in the business, you'll only suffer 20% with a limited company, which means that you preserve another 20% that you would have paid as a sole trader for investment in that business in the future, and that can go a long way.